So let's go on the live chat. It's way easier than we think. It's way easier than we think. You know, it's way easier than we think. So it's way easier than we think. So now let's say, for example, look for a trade that I played out, right? So let's go to USD CHF, for example. Let's go to a trade that played out before. So now let's look at this, right? Look at this trade, guys. So by the time price left the spot, so let's say we were trading, we're looking to trade like 61.8, which is somewhere around here. So before this, now this is how I think as a trader. Before this trade got to this place, I'm already seeing the opportunity. And I'm like, if price should break below this point, I will wait to see if price break around this point. If it breaks below this point, okay, good. If it breaks, if you give me a close around this place, I'll be looking for a pullback, right? Right. So I'm looking forward to execute at this point. So what loss? Above this point, when I want to set my stop loss, right? I'm looking at, from my entry point, is going to give me about 117 pips, right? And my TP is going to give me about 230 pips. You can see that the MT4 has done the mathematics for you. So all I got to do now is my risk per trade. So let's say I have a $10,000 account. My risk per trade is 2%, right? It's $200, right? So how am I being able to convert this into $200? That means I only have to divide $200 divided by what? 113. So someone do the mathematics for me. 200 divided by 113. What are we gonna get?
Did you say 113 or 118?
So like this. Look at it. So the stop loss is about 113.
Oh, I see. Okay.
So you're gonna have the last one. Can you see the last one? The last digit? So it's gonna be 1131. So it's gonna be like 200 divided by 1131.
Okay, so 200 divided by.
So it's 1.77.
What?
You said 200 divided by 113, right? Oh, 1131. I'm sorry.
Exactly.
Okay. So it's 0.17.
Remember
0.17.
Yeah. So remember our lot size will always be risk in the stop loss count, right? So now that's what we want to apply right here. So I measured this right now, and I said this is going to give us 1131, right? So so that means 200 divided by 1131. What do we get?
That is 0.17.
Yeah, that means 0.17, right? So that means right here upon execution, I will execute 0.17, and my TP is going to be 200. So now someone calculate my TP for me. You don't need to calculate your TP, honestly, because I mean your TP is just as simple as, you know, I'm risking 1131, you know, to make for 207. You know, it's almost about 1:2 already, right? So you don't need to do, but if you just want to know how much you're willing to make, right? So it's going to be 203 multiplied by 0.17.
You said 203
so
by
2030, because you have to add the last digit, multiplied by 0.17. It's going to give it, right?
Yes.
So that means you risk $200 to make $345. Is it a fair trade?
Yes.
Yes.
So you can see how we've been able to use our position sizing skills. So when you hear about position sizing in the market, just know that it's a way to calculate your lot size upon the specific trade opportunity in such a way that when you set your stop loss below, above or below the highs or low, it does not exceed your risk per trade. Do you understand? So you've been able to regulate every trade that you're on in such a way that it doesn't exceed your risk per trade. Now imagine that you are risking just $200 from a $10,000 account. Are you telling me that if price starts to move against you, it's going to make you lose the sleep? Huh? Do you hear my question? So my question is, let's say you have a $10,000 account size. If the market starts to move against you and your risk per trade is $200, right? If the market begins to move against you, let's say it has moved maybe like $100 against your position, are you telling me that if you risk $200 per trade and you are on a single trade and you have $10,000 account size, even if you hit your stop loss on that trade, is it going to make you feel frustrated?
I think it would, but I would be more frustrated if I lost more than 200. So you just kind of count your losses and move to the next one.
Exactly. When you launch, you already know, like, okay, especially when you've built the account over time. Like maybe you deposited $5,000 in it and now it's like 10,000, and you continue doing what you do. That's risk 2% per trade. If you bag just one loss from all the profit you've made and the loss is only $200, is it going to affect you as much? It's not, because you know what? You know that on your next trade you can make it back, and you know that it's only 2% of your account. But in a situation where you risk 50% of your account, trust me, you're gonna have watery eyes, you're gonna have headache, and I bet if you go check your blood pressure at that point in time, it's going insane. This is why a lot of traders lose money, because they risk more than they can bear, and whenever price goes against them, they sit down on the chart, like they focus on the chart, and every single tick, instead of focusing attention on the demand of the trade, now they are focusing attention on individual candlestick in such a way that if every single candlestick move against them, it's going to cost them more. And the more it moves against them, the more it costs them more pain. The more pain they feel, the more irrational they become. The more they want to close the trade, or the more they continue to have hope in a trade that, okay, you know what, I don't want to lose this money. I've lost more than 50% of my account. I don't want to close. Oh, let me move the stop loss further. Maybe if I move the stop loss further, price might reject. Then that's when they start praying for a trade. The moment you find yourself praying for a trade, then you don't mess up.
I've definitely been there.
That's it. The moment you find yourself saying prayers for your trade, that means you've risked beyond what you can bear. And the best form of trading, so you guys have updated my trading rules, right? So I'm going to be sending you guys. So usually I like to update this stuff. So let me send you guys my trading rules.
Hey, can you do me a favor, Yemi?
Yeah.
That formula one more time. Can you send a copy of that formula one more time as well?
Yeah, I can send it.
Okay, because one of the things that I know that I have suffered from is poor risk management. This screenshot, can you just send that over to me? Send that into the group, because I know for a fact that I have suffered years of poor risk management. Even though I'm definitely good as a trader, I have suffered poorly because of poor risk management, man. And I need to fix that. This period.
Yeah, I sent it. So let's look at the trading rule I just sent together, right? Let's look at the trading rule I just sent together. Now look at this, right? It's so ideal that you have a trading rule that you before you start your trade every morning, you have to read it, feed your mind with it. So it puts you on a state of, it helps you organize your mindset, right? So now I want you guys to focus on the second page, which is psychology practice before, during, and after trading. What's the first thing I said? Remove expectation from the trade outcome, as this will keep me or anyone within their trading flow, and it will make them, and it's going to make it effortless for you to accept your trading outcome. So how do you remove expectation? By following your risk management. So I said this will go further to helping me execute my trading strategy flawlessly as traded below, especially on risk management. So if you risk what you lose, that means you really don't have so much energy. You're not anticipating, you're not putting expectation on the outcome of that trade, because okay, worst case scenario, I lose 1% of my account, isn't it? Right? You know that the worst case scenario, I'm gonna lose 1% of my account. And that's it. So the moment you put yourself on that mental frame, you will be able to analyze the market logically and rationally and mindfully. Keyword mindfully, right? Then once you execute your trade, execution, risk management, and trade exit, upon execution, just focus on the trade. Just focus on the trade you are in at that particular time. So once you get off that trade, you can move to another one. Like I said, the goal right here, I said the goal is to produce wealth, a trade at a time. You don't have to focus on many other trades, because then when you focus on one trade at a time and you follow the demand of the trade and you get good results, it builds your confidence. And everything you need in trading to be successful is confidence. If you can have a confidence that, okay, if you follow your process, you're going to wake up today, I'm going to follow my process and I'm going to make money. You have gotten to a level where you are unstoppable at that point in time. So most of why many traders loses is not really the technical analysis. It's more of the risk management, and in such a way that the risk management, because they don't understand how to take risk in forex trading, it affects their psychology and it put them on a state of anxiety and fear, and that really made them make irrational decisions in trading. So if you are able to cut the risk management side of your trading, which in form will have a positive effect on your trading psychology, you are like 60% successful in your trading already. And this is why I feel the need for me to share this with you from the beginning, so that the subsequent thing we're going to be doing is just technicals. And if only what you need to be successful in trading is technicals, then trust me, you're already successful. Do you get the point?
Yes. I have to say this training has been excellent. I've never seen risk to reward be broke down to this level. And it's just when you put the money into it, like the dollar amounts, it just makes it, I guess, more real versus, oh, it's a 2-to-1. When you see what you might lose versus what you will gain, it's a clearer picture. So thank you for this.
Oh, you're welcome. You're welcome. And I appreciate the fact that, it's really the little things in Forex that makes the differences. Trust me, some of the best traders in the world lies as better as, but why is it that they are making money and you are not making money? It's because they understand certain things. They understand certain things and certain principles upon which the Forex market works on, and you just don't understand it. So once they take the same trades you take, they make thousands of dollars on it, but you're just up by $20, but because the market just moved against you, out of fear, you close that trade, and they eat their own TP. They make thousands of dollars, and by the time that you close your own trade, maybe the market just moved 10 pips in your favor because you've over-risked that you can bet. You close the market only for the market to continue to move in your direction. Then you are angry and frustrated, and but because you've been angry, you can't exit it. But now you went further to pick a trade you did not plan, and then you make a loss. And from that loss, you become even angry again. You want to revenge for your loss. You take another trade out of the fact that you want to revenge the market, not because the trade is okay for you to trade, and then you make another loss, and you make another loss until your account is 80% down in loss. Then you realize that what the hell have I been doing? And this is the vicious cycle.
You are preaching right now. You preaching.
I mean, everyone has experienced it. You know what I'm saying? Like we've all been there. We've all been there. We've all been there. And every single time I blame the market, I never blame myself. I'm like, oh, then you start to make excuses. Oh, he's the institutional trader. They're going on the stop loss on. Ain't nothing like stop loss on. If you put your stop loss below, if you put your stop loss below, so let me give an example, right? Let me give you an example. You guys look at this is the USD card, right? On this trade, since it gave me the setup. I got in on this trade since price gave me the setup. And this is supposed to give me some very insane percentage, right? So this is the version 1. So let's happen, guys, together. And I want to give you guys practical example to how understanding risk is going to change everything for your trading. Let's assume this didn't happen, right? Let's assume this didn't happen, right? So let's just leave it at this, right? When you see this, put it on the line tag. Isn't this a version 2? Isn't this a version 2 trade?
Yeah.
Right?
Yeah.
Is it? So now let's look at it, right? So this is as at the point where I got into this trade. At the point when I got into this trade, you know, my stop loss, my entry, so sorry, my take profit is 61.8, right? Now look at this, guys. Now, but because I understand, you know, how to take my early entry, so this validated for me. This trade validated for me the moment it broke this point. The moment price broke this point, right? Now look at it, right? So that means I'm looking forward to make about 350 pips, right? And I set my stop loss right here. My stop loss was right above this point, right here. Right above this point, right? So look at this, right? My stop loss was where? Right above this point. That means I want to make 350 pips. I risk about 200 pips, I remember. So it's going to give me like 1:1.5. Oh, sorry, I think 1:1.5, I guess, you know. Now, look at this, guys. I entered this trade, boom, it went straight into 150 pips, right? This is supposed to be a swing trade for me. It went straight into 150 pips, and the next couple of days, it started to move against me. Now, look at something, guys. For me to break even this trade, many people would have broken even and it must have hit them out, which is very fantastic. But me, I love to trade in a very established manner. I don't like to rush my trades. I don't like to rush to break even. Trust me, a trade that is going to go straight to your TP is going to hit your TP before you even break even. Trust me, right? So what did I do? I put my stop loss right on top of this point. Now look at what the market did. It came up as much as this point, you know, right to this point. It almost hit my stop loss. It came back and right is right here. Now, I want you guys to look at something. Would you say this setup is valid, is still valid or not? Has price broken this high? Has it broken this high level significantly? Has it?
No, not significantly.
All right, so let's look at the daily time. As price closed above this highest point it got to. So that means the trade is still in gain, right?
Mm-hmm.
So what happened right here, many people who do not know how to set their risk, right? Probably maybe when they entered here, they have put their stop loss right here. But in my own case, I've been able to adjust my risk in such a way that is only 2% of my account size while I set it right here. So I can't lose a sleep about this trade. All I gotta do, like when I'm in trades like this, okay, I know like, okay, it's gonna be a slow week, blah blah blah. Let me engage myself with all the things I need to do in real life and not sit down the chart, right? Mm-hmm. So now in this case, on the daily time frame, because my setup is mainly daily time frame, you understand? On the daily time frame, is giving me duration 3, right? You can see low break. You know, I thought it was gonna retrace the 608, but it did. but version 3 stay intact. On 4-hour time frame, this is a very solid version 2. My stop loss is still here. I haven't moved it, right? Price hasn't tested it because I gave the market the room for it to breathe. I'm not setting my stop loss right here. I'm not setting right here. I'm like, when you focus on risk reward, you make the wrong decisions. Some people believe like I have to set my stop loss so tight. Some people even say sniper entry and all of those bullshit, right? Real trading is not really about that. It's not a game of ego. It is a game of having a principle and following it dearly. In my own case, I put my stop loss right above this point, and price has not hit it since then, right? And I leave it for the market to do whatever it is, knowing fully well that even though if I'm sleeping and price decide to hit this for whatever reason, and this trade invalidates, like every trade is subject to invalidation. But if this trade invalidates, it's only going to cost me 2%. I'm not going to lose a sleep about it. And if price should come to this point, right, it's going to give me about 3.5%, right, from my entry point, about 3.5%. Do you guys understand it now? So this is how to use. You can see how everything works together. Risk management helps me to put me in a state of mind that I don't have to panic. Now, imagine I had risked like 50% on my trade. Trust me, by now, I would have closed my trade the moment it started to move and get to this point. Do you agree with me?
Yeah. Yeah.
Yes.
So you can see that me gauging my risk properly has helped me to stay on the best mind frame and allow the trade to move at its own accord. Not all trades you execute are just going to move straight into TP. Sometimes the market will give you some rally, and trust me, if provided USD card falls, it's going to fall like a knife. It's going to cut through everything. Do you understand? So what as price does, price has simply turned my initial variation 2 entry into a bigger variation 2 entry. Do you see the bigger one?
Yeah.
So in my own case, anyone who hasn't got it in this trade before will be looking forward to the break of this point. But for me, I'd already got it in right here, and I left the market to do its job. Do you understand it now?
Yes.
So I want you guys to watch this video again. You know, always define your risk. What makes the difference between you and the consistent trader is the consistent traders understand that risk is everything. At the end of the day, the reason why you want to trade is to make money. And because you trade the forex trade market does not make you a risk taker. Many people think automatically because I trade forex, I'm a risk taker. For you to be qualified a risk taker, have you mastered the art of accepting your risk whenever you execute your risk? And the very way to accept your risk whenever you execute your trade is to set your stop loss, set how much you're willing to lose per trade in such a way that it does not leave your psychological threshold. So for example, like me, I know anything that is beyond 2% of my account will put me in a state of panic. So what do? I try my best not to risk beyond 2%. So that keeps me in a mental frame that I'm in flow with the market, and I can see every information not through the lens of panic or anxiety, but I can see through the lens of my setup. So for example, how do I mean through the lens of anxiety? Now, if I risk 50%, maybe because I saw that this was a perfect trade. I mean, come on, Dan. If you look at a trade like this, right? Christine, can you guys see George? If you look at a trade like this, you can almost bet your life on it that it's going to come to TP straight up, right?
Mm-hmm.
You can almost bet anything on it. This, as at this point, this was a very clear version 2. And we know once version 2 happens, it's always impulsive to the downside, right?
Right.
But you can almost bet anything. But because I have an understanding that the market, it's not a certain environment, I have to put my risk management in check. So imagine I'd already be 100% confident about this, and I said, oh, it's going to come down. By the time the price starts to move, and I'd already execute what I beyond I can bear in such a way that I try to get to this point is already 50% on my account. Trust me, the moment price starts to reverse to this point, I would have closed. bet you I would have closed around 20% of my account. Now, there's no way I want to be consistent, risking 20% or losing 20% of my account on a trade.
Yeah.
The goal is not to hit home runs. The goal is to build your wealth consistently and follow the process over a couple trades.
Right.
Okay, what is my performance this month? What is my performance in the first quarter of the year? What is my performance in the second quarter of the year? The goal is to raise your equity curve in such a way that by the end of 1 month, you can be able to say, oh, I increased my portfolio by solid 10%, solid 8%, and then do it the next month and do it another month. At that point, your existence attracts money. That means you can confidently wake up and say, I want to get on my laptop and I want to make money, and definitely you're going to make money. At that point, you've achieved consistency, and there's no way you can achieve you will achieve consistency without understanding risk. Because when you risk what you can bear, it puts you in a psychological state that you focus on demand of the trade at every point in time. So now, what do I mean? In as much as price has given me this retracement to this point, you can see that the demand of the trade is still respected, because number one, it has given me the confirmation I needed by breaking this point, and price has not actually invalidated by not breaking this high. Do you get it?
Yeah.
So it put me in a state of mind that I'm seeing what is going on in the market for what is really going on. I'm not seeing it through the lens of, oh shit, I'm 30% down. I'm 30% down. I need to now start looking at each candlestick and making a rational decision. No. I'm in a state of mind that I'm in sync with the market, and that is how you should trade. So you can see how risk management affects everything in trading. If you want to be consistent, you've got to understand risk. How to assess your risk. If you want to have less anxiety in your trading, you have to understand how to set risk. If you want to overcome fear in your trading, you have to understand risk in such a way that you don't. The reason why you fail is because you are afraid to lose your money. But if you be able to downsize it in such a way that it's any amount that you can lose that you are setting, then the fear is being contained and managed. So on this note, I would like to call it a day on this class. So thank you guys so much.
I have a quick question. So if you only do 2% that you are risking, do you enter multiple trades at one time? Like if you see several trades that look good, do you enter more than one? And would you risk more than what would you risk as a whole on the account?
So I have a rule that I don't risk more than 2% per trade. And on a whole trading session, I don't risk past 4%. That means on the maximum, I have to take 2 trades at the same time, right? On the minimum, I gotta take 1 trade. But these days, honestly, I just focus on 1 trade at a time. You understand? Like the goal is for me is to build money 1 trade at a time, because hey, look at it on the long term. Think about it in the long term. Right. The same 2% that you risk today to make maybe 3%, the same 3% that gives you $300 today, if you stay consistent and do what you need to do and focus on the process and maintain your risk and just keep it better, that same 3% in a year time will give you $3,000 per trade. Mm-hmm. That same 3% in a couple months later can be giving you $6,000 per trade. That same 3% can be giving you $10,000 per trade as time goes on. All you gotta need is time. The beauty about Forex is that once you start being consistent, your account grows not in an arithmetic progression, but a geometric and exponential progression. Mm-hmm. So that means you can easily scale $1,000 to $10,000 in a short time, because the more it grows, the more you qualify to increase your leverage. And the same 2% you used to risk when the account was on $1,000, which used to be $20. By the time you scale it up to $5,000, the same 2% on a $5,000 will be $100. By the time you scale it on the $10,000, it will be $200. So depending on the risk you want to use. So the goal is to focus on the long term. The 2% that you close today that gives you $1,000 will give you $10,000 in no time. So when you see these folks making $50,000 per trade, look at their backstory. They've been trading over the past 4 years, doing the same thing over and over. They never focus on the money. The money begin to compound on its own. They use the same risk they used to use 4 years ago. But these days, the same risk they used 4 years ago is now giving them $50,000 per trade. It's simple. So it's a process. Everybody think Forex is different. Just like every other business, you're not going to start a real estate business today and expect to flip 50 houses in a year. It's not possible, Dan.
Man.
So trade Forex with respect. First, understand the process. Now, practice the process and focus your attention fully on the process, and come back in 6 months' time and tell me if you do not make any significant growth. Come back in a year time, tell me if you're not paying your bills. Come back in 2 years' time, tell me if this is not beyond sustainable. And this is something you can use to create generational wealth for yourself.
Bro, I just want to say thank you so much, man. This has been such a phenomenal class. Just learning this alone is about to put me in a whole nother stratosphere. I can tell you that now. Just
Agreed.
That. The risk management alone, man. God, dog. This is awesome.
Yemi, can I make a request for the next class? Daniel showed us our trading journaling. Can you show us yours?
Okay. Yeah, definitely. I could do that.
Awesome.
I could do that. So what I want to do is, like, before we even get into like the technical part of things, right? I want to be able to, like, you guys, I want to be able to give you guys, like, I want to be able to close those rough edges, right? Those things that are, even after you understand technicals, those things that could be holding you back from making money, right? So it's like about the risk management. It's about the role of journaling in trading. It's about how to journal in trading. Like, some people don't even know how to journal. And the purpose of journaling is that you put all of this down so that you can be able to get data from your performance and use it to improve yourself, right? In your trading. Like, how are you able to create your journal in such a way that it opens room for you to get those data that you need to use to improve yourself? Because the game is really about optimizing yourself. Like, I've been in this game for too long and I still learn every day. Like, learning does not stop. So you need to master the art. You need to know how to learn how to learn. Basically, that's the purpose of a journal. How do you learn how to learn? Is by journaling that way. All right. So we're gonna talk about all of that, and I'm grateful. Like, this whole class and what we're doing is so different. Like, we're not really focused on the technical side of things. We're really more focused on, like, things that are not technical, things that are infinitesimal, but at the same time they have like greater impact on your trading and your equity curve as a trader over time. So if we can be able to focus on these, right? By the time, if, like I said, if the only problem that you've got at the end of the day is technical, then I believe you're 60% successful already. These are the orientation we never had when we got into the game. And this was what slowed down our journey, right? Even as a fantastic trader, it can slow down your journey until you understand what it works. So the difference between you and every other person right now is that you are being orientated the right way, so that when, by the time you get into the market, you can be able to have a consciousness of the other component that makes up the forex market, but they are not pronounced, but they have greater impact on your equity curve. So thank you, guys.
Man, where have you been all my life, man? Thank you.
That was good.
I truly appreciate you, champ. I truly do.
Yo, you're welcome, guys.